Welcome to the Investors Trading Academy event of the week. Each week our staff of analysts and educators tries to provide you a better understanding of a major market event scheduled soon and that will have an effect on the global markets. After the Federal Reserve raised interest rates in December, the conversation shifted to how many rate increases there would be in 2016. Every day the markets and the Fed watch's prime concern seems to be the ifs and whens the next rate increase will occur. Traders have now pushed off the expectation of an increase at the March meeting, which has sent the US dollar tumbling. This week the Fed will be the main focus, with Janet Yellen expected to keep the markets jumping as she keeps speculation about the likely path of US monetary policy at the forefront. The spotlight now falls to Fed Chair Janet Yellen, who will take turns delivering her semi-annual testimony to the finance committees of both chambers of the US Congress. Needless to say, traders will be most interested in hearing from the central source of the FOMC strategy on where policymakers intend to steer. Comments from various other central bank officials in recent days reflect a broadly deliberative posture. However, some are seemingly leaning toward a more cautious interpretation of recent market volatility, while others are more readily dismissive of it as transitory. Clues about where Yellen falls on this spectrum may prove formative for the near-term trajectory of risk sentiment trends and Australian dollar alike. While the chair will go out of her way to strike a balanced tone, her representation of the FOMC middle ground ought to prove instructive onto where the majority consensus is leaning. Comments hinting that the committee's appetite for rate hikes has diminished less than that of the market may weigh on risk appetite. The market will be intensely focused on Fed Chair Yellen's testimony on Wednesday and Thursday, which should give people a better sense of the Fed's intentions in the coming months, as recent comments from others suggest a less aggressive path of rate increases than expected. This is also one of the last heavy weeks of earnings, and that should keep investors focused on weak results out of the stock market. All eyes will be on the US dollar and Fed Chair Janet Yellen to determine where interest rates are going, which is potentially bullish for gold.